Okay, so it's late at night and I can't sleep, so I thought I'd go to the infamous YouTube and type in the word forex, and I wanted to see the latest thing today only, filter for today only. So I come across this guy who's just a really nice guy. He's a golfer, and he's very level-headed. There's no way this guy is robbing banks, or I don't even think he beats his wife. This guy is the cleanest guy in the world. So he takes us through a video, and I know a lot of people use these 100-day moving averages and all that, and I guess it sounds like I'm picking on that, but I'm only saying that it's a belief system. There's no when the market comes to the 100-day moving average, it could have just as easily come to a 50-day moving average. If you've ever put a 50-day moving average on and said, maybe I should use the 50 because it's got more trades in it. Now, if you get in the markets based on Alexander Elder from Russia, and he uses the 13 EMA. And I think he probably uses 13 because it's Fibonacci, and it's one increment faster than the 14, which is the classic across all out of the box. Well, at least I think maybe CCI was 21, and RSI is 14, and stochastics is this 358 stuff out of the box, right? Now, anything can be tightened up if you're going to do that. If you're going to play that game, it's basically like if you decided that you're going to play, kind of build your music career on top of the fact that you have a auto-tune with you, or you have a wah-wah pedal, or you have a delay. Now, in terms of having a delay pedal with you, you have to notice right off the bat that if the drummer is not aware of your delay, if he's going to clash against your delay if you don't have that set. And maybe that's what you want. But if everybody agrees that's how it's going to be, that the art that you're doing is kind of a mess, people are like, well, that's his style. So now maybe your style, but now also if you're going to use moving averages and you're going to do, say you picked a set of moving averages. I don't know if you ever heard of this guy, Ing. Ing is from Asia, and he wrote a book. Big heavy book. These books cost like $70. Okay, he took every Fibonacci moving average. He went 3, 5, 8, 13, 21, 34, and it looked pretty spectacular. Or you could pick every 3, right? And I've seen people do it. I have a rainbow moving average in my system. And the thing is that what are you doing with that, right? Are you taking every trade off of every one of those? Do you pour more emphasis on the ones that have a steeper incline? And when that's all said and done, forget about the fact that you're like, well, it's going up based on this. Is that going to be a market order, a stop, a limit? Are you going to wait for the crossover by the market and just go, well, just find a low to place a stop, and hopefully I haven't put my stop in too tight. And if you've only got one bullet in your gun, man, this is tough, right? This is like you're going to go sail across the world, and you've got one map and hope it doesn't get wet. And what if the weather changes? Well, if you're going to sail all the way down to whatever in one of these, voyages where people are trying to break a record, you're totally not going to make it on the path that you chose because the weather's going to change. So markets like that, weather's going to change. Do you have a backup plan? Do you have a tent that is waterproof? So having this like Swiss Army knife of trade plans, at least 3 different styles, you can navigate anything, right? So if you're a musician and you have to play in a rap band because it's the only money you can get, and you're like, you know what? I guess I can get my brain around this. So I'm going to do it. I'm going to live there. I'm going to live inside this style. And since you're paying me for it, Okay, it's like what if somebody paid you to do bad work? Now I know this isn't really what happens in the real world. Normally, if you're like an artist or say you're a architect, nobody's going to pay you for buildings that are unstable or aesthetically disturbing, or stuff's not lining up. There's gaps, there's holes. Well, but trading is like that. There's a lot of stuff that is the volatility is messy, and then when it goes quiet, it's basically like a house that has 113 and a half floors on one side of the house, and the other side of the house is 5 floors underground. And you're living on the main level, and you're like, why did you build a house so tall? And you only put why would you put 113 floors into the basement so when the nuclear holocaust starts, we can all crawl down to the bottom level? Like, what kind of house did you build, buddy? So this idea of balance, right? Now that would be the binary view of the world. Now, the guy who's doing this video, he is just, you can really see into somebody's, because the market is static. The market is really just stuff people put on top of what it is. It is true that there are times when the market is reshuffling the deck and it goes into a range mode, and so that is nothing more than like the if you go to a party and you just hear background voices, but you can't pick out one conversation. There is not one conversation. It's literally just this syllables, and it's kind of soothing in a way because there isn't anything to attach your brain to and get a bias. So it's more of a Zen type of a you're just in the middle. You have a neutral stance. So you're in neutral, and when the market does, I'll draw on the screen here. When the market does a move like this is like a guy getting up on the table drunk and singing, happy birthday to his girlfriend. And everybody's like, what? Now, this whole time here, and this guy's going to describe 60 pips of this, 61 pips, and I have 20, these are 20 yard lines. Every time we go 20 pips. And it is true. This is very, and there are trades in here. So, but I'm not picking on this guy. There's nothing wrong with what he's doing, and you're going to see that he describes what's going on. But I want to stop him every time he gets to a thing that psychologically triggers something in me, and this is like the only thing YouTube's good for. And people probably think there's a guy in Britain or a guy in Australia, one of these Stapleton disciples, who has all the lingo of these guys. He's basically just taken their class, right? And he said to me that I shouldn't urinate on his video. So they think, these Stapleton people think that I'm, whatever they call it, trolling or doing bad stuff. But listen, if you're going to put stuff out there, I'm waiting for the guy to rip me apart, right? I don't care. I mean, if you care, and of course, I don't know what he's thinking. He said that I need to just worry about my own analysis. Well, I am worried about I'm worried about anybody that's trying to trade these markets, and they're following the path of the textbook trader. Like, I don't know if anybody went to college, but I did for a little bit. And even the college that I went to for 9 months, trade school, everything in there was an idealized version of reality. When you went out into the real world, it's like, you can show me all day long how to fix a car. I'm going to guarantee you, in every mechanic class in the world, they're probably not going to hand you a nut that is butchered, rusted, smeared, and ask you, okay, are you prepared to recut the head on that nut so you can get it to fit this socket? Like, that stuff just does not show up in any college in the world. They don't give you this lifeboat scenario, these kind of things. But the whole time you're trading, you're in a room with other people, and it only takes, Mark Douglas says, it only takes one guy somewhere else in the world to destroy your whole trade plan. Like if somebody comes in big enough and they make a move, everybody's going to jump ship. So now when this guy's going to present his view of the market, and it's, you know, the problem is that the guy is totally civilized. He's got golf clubs behind him on the wall. He sounds like your dad. He sounds like the most respectable guy in the world. And a lot of the stuff he says rings true with people. And I'm afraid that when I look back on this stuff, when I first watched people like this, I thought, well, apparently I've got to start playing golf. Apparently I've got to calm down. Apparently I've got to do all these other things, and then I can become a trader. Or like this, well, you have to be a serious trader. Well, you don't have to be a serious trader. You can be a goofball, shoot from the hip, winning trader. The problem is that if you're winning like that, somehow you're breaking this rule of, oh, you should be, you should really be wearing a suit and tie. If you're going to make that much money, buddy, listen, let me just tell you something. We don't let people in here that are just winging it. But, you know, it's funny because I've made more money when I started out winging it. And, of course, this was, you know, trading without stops, all the stuff you're not supposed to do. But it's fascinating how much money you could make in 1 month. I just traded without stops on a demo account here. I tripled it in about 1 month or 2 months here, just not even trying. And I don't think I was near blowing it up, but the idea that you cannot do this stuff, you cannot take $100 and turn it into $1,000 is complete garbage. Now, if you don't believe that's possible, you're going to make sure it doesn't happen. That's the only catch about this stuff is that your belief system. So what you're going to see here is his belief system and how the market. It's probably not the best mindset for seeing what I think the market's actually doing is it's pausing and then it's moving, it's pausing, then it's moving, and it does go up and down, but it's just so I'm going to play. Now he's talking about the euro dollar here, and he's talking about the fact that everybody thought this was going to go to par, right? And now he's saying that, you know, people aren't sure it's going to go to par now. Well, I mean, who didn't think that? When we went sideways, we didn't go lower. We did that big spike up. It didn't really matter if you're ever going into par because for the last 2 years you could have traded the range. So where this thing's going, the bias and all that nonsense, and this guy recommends that you have a bias, which is very odd. I mean, it's very conventional. I guess it's conventional is what I'm trying to say. It's conventional thinking, and or as my buddy used to say when we were kids, we used to say conventional wisdom, you know. And conventional wisdom is conventional, and maybe it's not a good fit for a radical, spiky, over-the-counter market like forex that is literally nothing but an auction mess all day long.
This whole talk about managing trade with a post that Ryan posted this morning. He titled it, "Who is going to be the last one out of the euro versus US dollar parity door?" Well, the gist of the story is that there's a lot of economists, analysts out there at major banks who are getting out of the idea that the euro versus US dollar will head to parity this year. Things change, okay? And that's the problem with these longer term projections, but as Ryan points out, people want them, so we give them to you. And
now, isn't that sad? People want them, so these guys give them to you. And so I just heard somebody talking about, I'm on the YouTube there, and I come across somebody complaining about that the Jews are making all this money in Hollywood. And I'm like, I wonder if all the customers at the movie theaters are Jews. And I'm thinking probably not. So aren't people willing to take responsibility? Isn't the crowd willing to take responsibility for voting or for choosing to spend their money? And my God, what is the price of a ticket now? Wouldn't you rather just put money in your forex account and watch your own movie? Watch yourself make money in your own trading movie? I just don't get this going in the movie stuff. I mean, movies just suck now. I'm watching movies from 1960 on YouTube. For God's sakes, it's the only salvation for half your brain is. I mean, movies are just about, oh, let's make this dazzling. I mean, it's really Disney taken to like a saccharine sweet mode. But okay, I got tangential there. But this is the problem. And then here, the problem is the people demand it. They want to see advanced patterns. They want to see the holy fucking grail, man. And I'm sorry, it's inside you. When you perceive to be an opportunity, this is why it would be so fascinating to I just got to sit down with somebody that's sitting in front of me that's never traded in their life and just put the chart in front of them and crop out the prices. So all they see is a line, not even I got like moving average, smooth candles on the background. You hear smooth bars, but I would just like to see. People say, well, what the hell is that? Like, is that a string that's splattered on the screen? But this guy here, he's got the 200-day moving average, okay? He's got the 100-hour moving average. He's got a 38.2% retracement. Now, these are all the classical tools. Everything. He's even got the fundamentals up here. Okay, let me let this guy.
The thing is that it becomes very difficult to do that sort of thing. In fact, Forex Live did it at the end of the year, and I was in that parity camp. It just...
See, now, and everybody gets in this group think thing. Now, another thing, he's going to point out in this video that he's going to describe what people are thinking, what traders are thinking. And that may be true for some traders, but the market is just a display of prices getting filled, holes getting filled, and then rejection, acceptance, rejection.
This made sense, didn't it? But doesn't necessarily mean that it's going to happen. Why? Because things change.
It made sense. Okay, now, this is why everybody joined this camp, because it made sense. It was the right thing to do. It made sense. And that is got to be the quintessential. Who's going to do something that doesn't make sense? Are you risking money? Are you a serious trader? I don't think you're very serious. You're not doing stuff that makes sense, buddy. That doesn't make sense. So, another big belief system that's, for me, no longer valid. I don't feel comfortable taking social rules into these markets.
Who would have guessed that the U.S. First quarter GDP would be 0.5%? We all expected it to be 2 to 3%.
Listen, that number's got nothing to do with the price of tea in China. It wouldn't go there if the growth rate was 1 billion%. It's just going where it goes. And maybe it did affect it. Did you have a trade plan for that? Once you start to put fundamentals on top of the picture, now what you've done is said, okay, I'll meet you at 5 o'clock, but I don't tell you whether it's AM or PM. You've taken out, when you add fundamentals, now I can tell you, listen, fundamentally, I did want to meet you at 5 p.m. It just wasn't going to be this 5 p.m. Oh, it might happen way out there in space, and eventually I'll meet you. Fundamentally, I'll meet you. And these fundamentalists, and the technicians at least are attempting to give you a projection, price, time. This is the momentum. This is what we think it's going to get there on time. And this fundamental stuff, come on. This is just to make you feel good. Feel good garbage. After the move, then the news comes out, and then the story's written around the move. Oh, geez, well, look, how do you explain this? How do you explain that move?
And that would have led to potentially a Fed tightening in the first quarter, 3 or 4 tightenings for the year. We'll be lucky if we get another one this year. In any case, Ryan points out correctly that what's mostly our modus operandi at Forex Live is to look at what's happening now fundamentally. Look at what's happening.
But why would you look at what's happening now fundamentally when what's happening now fundamentally for me is not blowing my account up.
Now, technically, and make judgments as far as what we
Just my own personal issue. Just don't blow the account up.
expect the market to do in the more near term. After all, it's hard to predict the future, just as these economists. And so the other day I did a post, or I did a video
But
actually.
it is possible to at least predict the next 45 minutes to 3 days, I think. And you could do a long-term projection. But you'd have to do 2 different targets, the up story and the down story. You wouldn't want to have a bias.
About the euro versus US dollar. And one of the things that I look for is very narrow trading ranges. And if we looked at the range for the week, for half of the week, going into midday Wednesday, the range was only 61 pips wide. And that is historically low. The lowest trading range that we've seen in the euro versus US dollar going back to 2014, end of 2014, was about 123 pips.
Okay, so I think I've marked off the spot here. I zoomed in. I have a little bit more zoomed in picture than he does, because I don't care much about that stuff on the left there, especially if I'm going to trade what's going on right now. In these last 5 days, of course, it's coming. The market's coming at you, but this section, this wick here, this wick here is this wick here on my chart. This peak here is this peak here. So I'm trying to do blow by blow, and so I just have a 1 period moving average on top of like a cluster of different kind of, different color candles for up and down, just to make something pretty. Blue's supposed to be downtrend. Green's supposed to be up. Doesn't matter. This just looks cool. I could strip it all down. I could take it all off, but yeah, it's there for the moment. So now, right here, I gotta crunch this down. So this is he just published this. So this is pretty much the end of the market here. Let me get my thing scooched up here to get it in there. So here's all the data. So here's where he's at.
We were at 61 midway through the week, and so I speculated that we're going to extend the trading range. And indeed,
notice his precision, 61 pips. He's actually identified 1 pip beyond. Now this is, I'm going to rip this guy apart, I guess. I'm not ripping him apart, but just think about this. This is 20 pip grid. He's picked this 1 pip here, and he said 61 pips. I think 50 pips would be acceptable too, but look at the closing prices right up against the edge. 2 days in a row here sideways, and you could spend a whole, I guess, if you wanted to show every zigzag here, what it means, what's going on, you could spend quite a bit of time just on this area of the chart. And that's why these moving averages, to me, all this stuff here is so way out there. It's so part of a bigger picture. There's plenty going on right here. This whole can't pick a good color on both screens here, but this whole valley here, this 20 pip valley, there's a trap here where it's just like this. Okay, they trap these guys here, and then they run that puppy up into here, right into the closing prices. So that's that yellow zone up there for him, but I don't know what he's doing. This is Fibonacci bullshit he's got up here. It's just garbage. I mean, I know that you need a 9. I mean, he's got golf clubs, so I think this is like, I got a 9 iron for the, I got a driver. Here's the wood. My wood is I drove the ball. This is the putt, right? You drive for show, you putt for dough. Well, if you're playing golf, this is the hard part. This is the putting. Look at how many pips. It may be a 61 pip window. So that means that during those 2 days, you could have bought, sold. You could have made about 200 pips in 2 days there. if you're that trader, if you're the guy that can live in this box. Go back to his thing.
On that Wednesday, what did we see? We saw the market show some signs of bullishness. We saw the price move above the 100-hour moving average. It's a blue.
Wow, now here's where it just blows my mind. For me, because I've chased things, I've missed out on things, my view of this is, if I'm not buying down here in this trap, I'm like, holy shit. I would buy this retest here, and I'm already bullish. And not to mention, he doesn't have a line chart, so he's going to miss this subtlety. This is actually a 1 hour chart, so this is about an 8 hour setup where a top becomes a bottom. Each bar is an hour, so you have about 4 hours up, 1 hour back into this. Another top become a bottom. Bottom, double bottom becomes a top, right? I mean, come on, man. These are just amazing. And this is, this is 20 pips. You just made 20 pips with a 5 pip stop or 8 pip stop. You made 16 pips. 8 pip stop to make 16. Of course, put a spread in there. You better make 20. You better be risking 8 to make 20, because once you put slippage and a spread in there, and you've got this trend line break on close, find support, a little sloppy. You just got the plain old fact that if you're not long in fair value, which is the middle of this, and this is the 40 pip zone, and when the next day happens, take a look at this rectangle here. When this day comes upon the scene, this is a lower volatility day, naturally. That's kind of not stacking up color-wise, is it now? Fuck. Here. But see what I mean? So that's a big deal. The fact that is less risk. Now, at this point, when it goes above, so if you just keep moving this along, he's picking 2 days there. Now, his breakout point is so late. He's going to turn bullish. How are you not long this thing already? Why aren't you long this thing? Like, right here. Trend line breaks. Pulls back. He's getting in here. Now, he goes bullish. I'm bullish already. It's going up. I'm bullish here. Isn't everyone bullish here? Hey, I'm bullish. Hey. It's like, wow. Hey, might go somewhere. Might go somewhere. Yeah, retest. Man, look how critical that 20 is. That's why 618. That's why 38.62, 61.8, 23.4. It's garbage. Rubbish, as they say. That's what they say over there. Rubbish.
Line of this chart, and suddenly we saw a move to the upside. That move to the upside took the price above the high for the week, so we extended the trade
Suddenly.
range, and we went up to another.
That's a movie you got to see. Suddenly, Frank Sinatra.
Level right here. This other level is the 200-hour moving average. Now, in my trading, in the way that I look at trading, and the way that I think that you should look at trading, is that we have a bias, okay? And the bias turned more bullish when the price moved above the 100-hour moving average.
So his bias is, and if you turn bullish, you see where he turned bullish. Who's jumping out? Like, you turn bullish here? Man, you better hurry up and get on that train, buddy, because every hour you wait to get in this trade, you just missed out on. If you didn't buy below this, and you didn't take something off here and just let it go, turn bullish here, and then you're going to get smacked in the face. And the fact that this thing craps out to 200 is not the reason why I'm looking at it. I'm just looking at the fact that, there's a lot of people have sell orders up there because that's resistance. Just in a horizontal world. Forget moving averages for a minute and just think about horizontal price, because I think that's always going to be the first criteria. People are going to buy here. It's support. They think support, and some people are going to trade that breakout. But even if you trade that breakout, you don't have to chase it. You can get back in on this double top. You can't see his line chart here.
Got even more bullish when the price moved above the prior high. And then we came up to this area right here, and we couldn't get above it. Well, we got above it, but we couldn't stay above it. And so now it becomes a question of, can we go through it and make our way to the next target, which would be the 1465 level, or are we going to fail and start to take back what we just took? And what I mean by that is to take back things like the break above the prior high for the week. That would be not a bullish sign. It would be a more bearish sign.
And notice at this point, he has not described any trades. He hasn't said that he got in there when it turned bullish, then he got the hell out when it came up against the 200.
For the euro versus US dollar. And so
can't you just say that?
We as traders want to make sure that we see progress in the direction of where we are going. And that...
You mean to tell me you're long? I gotta have some coffee. You're long and you're looking for progress in the direction that you chose. So you're saying you're in the market, and yeah, everybody wants to see their trade winning. But is he saying that we want to see progress, and then we're going to get him because we have confirmation, we've broken through this, we've broken through that? Isn't it too late by then? Isn't that just and this move is so quick here, isn't he concerned about the quickness of that move? Isn't this a problem? The fact that you moved so fast in one day, you climaxed, you took out this day's high, and try to get through this day's high. But the fact that you filled the void that was forming here, whoosh. And the fact that this is low volatility in his opinion, the sideways stuff, haven't we seen this auction move before?
That can change. That story can change. Just like the fundamental stories can change for the euro going to parity really quickly with the 0.5% GDP growth. And so what we saw was, first off, a battle going on here against the 1419 level, the old high right here. We started to see the traders starting to lean up against that 1419 level. They were still hoping that the price could hold that level and move above the 200, move above the 65 level, and then head to new highs and continue this trend to the upside. I'm convinced of that because that's what we're seeing here. But what happened? Well, what happened was that the price didn't stay above that 114.19 level. We moved below it, and all of a sudden we started to use that area as a resistance level, as a ceiling. So we went from being support to now resistance, and that was the key. That was key. The price moved lower, and where do we find support? We found support against this blue line, which represents the 100-bar moving average on the 4-hour chart. We also found support against a trend line here. This trend line connected lows going back to this day.
But in essence, and a lot of people get tricked into this, in essence what really happened was we found support at support horizontally speaking. It's wonderful to put the moving averages and all the magic on top of here and all the smoke and mirrors, but in the end, I really do think it's about price. And so, what did you say? We found support here. Yeah, you bounced off this support here. It was also fair value. It was also a lot more hits here. This is the water table. This is fair value. This is the bounce. Certainly you could say, oh, I got a trend line here. It's very difficult. When you start to get into trend lines and stuff, this is where you got to really tighten that up. If you start putting too many of those up there, that you got to have a trade for each one. And that's a setup into its own. And this was, and if tops become bottoms, this was supposed to be support, and they crushed it. But this is the entry for me, is having the sell limits here. It's for this, and certainly this was a great 20 pip scalp. Wasn't that just a great trade?
Day right here to this day right here to this low right here, and we came down to that level right there. So would you expect to see support against that level? Yes. So in managing the trade, if you were to have gone short right here after failing up there, would you be interested in perhaps buying down here? Well, some traders did, because they leaned against that level, and what happened? The market moved back above the 100, and where do we come up to again? That 1419 area.
It's debatable whether they leaned on that. There must have been a lot of people buying there. That made it bounce up. A lot of people came in here, bought, and then they sold. So it's buy, sell, buy, sell. And I can't say these are self-fulfilling prophecies, because I'm going to show you some data one of these days that's not even market data, and you're going to see all the same patterns, and you're going to say that has nothing to do, that's not even market data, it's just Mother Nature displaying, Mother Nature just moving around.
So we went from a level of support in managing the trade down here to a level of resistance in managing the trade up at the highs right there. And so there is a battle going on, a battle in between here and a battle.
I don't know what he means when he says managing it. You mean you traded that? I don't get it.
Battle in between there. Do you see it? You see it? Do you see why I had those levels in? Why I talked about those levels? Good. And so now what happens? Well, we end up getting and trading below that key cluster of support here. And admittedly, right through here, the market had some difficulty. The market traded above and below this cluster of support right through here with the moving averages, trend lines, it's all sorts of things right there. And so, you know, you can see on the hourly bar how we needed to get a close below that area. And as lo and behold, as soon as the price was able to close below that area right here, did we ever trade back above it? No. Why? Traders were leaning. Traders were managing their trade against risk.
So here it is. In the you can see it on the 1 period moving average very clearly. Right here is the double bottom, becomes a top. The black bars are the actual prices. Here's your trend line. We break. There's a triangle collapse. It's not too late to get short. Yeah, believe it or not, it's not too late to get short there. This is quite a detailed entry here. This is like a baby channel up into here. This bottom becomes this flat top, double top. Here's the wick. So they're scooping out this void here. This nature's filling this hole. Then bashing down again. Nature fills that hole. They're looking for low volatility entry. Low volatility in terms of the last known little. It's just so, you have to zoom in. I don't know how, you're looking at too much data for me. So Look at, I'm just going to focus on the latest thing there. See how clearly these top become bottoms? You can count each hour here. This is not be difficult. I got a bad background color here because you can't see but you can see the black is the actual bars. So your limit here would have got filled because this is the black. Here your limit would have got filled. We came back in to this. Here, no fill. Never came back. Sell limits are here. Maybe you got filled here. You definitely got filled there. And even off of this one is a totally valid place to put a sell limit, and here and here. All this stuff forward. This is 20 pips, so here's a 5 pip window. So he's talking about managing trades. I mean, if you're really going to do this, you've got orders like that. You're buying every 2 pips deep for the next 4 hours. Everything's biased in a profit this direction. Look at this sell limit. Comes back and hits that. Actually, almost nicks up in here. So here's your sell limit window. This is only a 5 pip window. You're already up 10 pips, 20. Those are fantastic trades. Got to hand place all that. You cannot hit a button and launch a robot. Robot's never going to custom contour to current data and what's going on here.
Defining levels. They were trading in the moment. They were looking at this area right here, and I'm sort of convinced that as long as the price remained below this area right here.
Well, they were trading in the moment. What they're really trading is volatility. Notice the deadness here. This is about a 10 pip. Now, I don't know why he stopped using that box that he cleverly used before, but look at this window of nothing. It's like, uh-oh, and we're not able to get above that.
It would have gone lower. Just like if it would have gone above this area right here, we would have gone higher. But it didn't do that. It did this. And so traders leaned.
Not necessarily. It could go on sideways here, and it could have burst up. It could have burst up from here. It could have done anything. Anything can happen. Anything can happen. So the Fibonacci's, and notice he has not referenced any of these dumbass Fibonacci's. He hasn't said anything about that.
Against that level and force the market to the downside. And trading here today, what did the market do? We fell below another target level. That was the 200 bar moving average on the 4-hour chart. We also moved below the low for the week. We extended the range for the week right there. Note here how the price.
This is why my targets would be pips. How can this be a target? See, this is such arbitrariness. These moving averages coming in like this. That's a target? Holy shit, this should be the target. I'm trying to make it to the 20-yard line. I'm trying to make it to the 20. To the 20. I got to count these pips. If I'm risking 10 pips here in this window, and I'm trying to make 20, got to make it to the 20. Got to make it to here. Just got to get scaled out of that thing. Otherwise, you should have a 100 period moving average, a 110 period moving average, you should have 120, blah, 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 blah. Yeah, they're all targets for a scaling trader, for an active high-frequency trader. High-frequency trading doesn't mean, for me, it doesn't mean, I mean, it's frequency based on the frequency of your life. If you're gonna live a million years, then trading once a month is high-frequency trading, right? And so it's based on, it's relative. That's what Einstein said. It's all relative. So
use the prior low as resistance, managing the trade to the downside. Stay below, stay below, stay below. Everything's okay.
Those are entries, though. Everything he marked off there is an entry. This is the kickback right here. So you really got to do the forensics on this stuff. That was the kickback. I think. Kickback. Boom. Some people got in here on a breakout. Some people had sell stops stacking up into that before the down gush. And if you're going to trade the color wheel, the this is your bias right here. See, his bias is, oh, we broke out here, so we're going to be biased. It's just a lagging. If you're going to play the bias game, go with the last 5 bars. In fact, if it makes a big move like this, bias is down, like bias down, right? Big move. Bias is down.
That we stayed below was key for the move to the downside here. Got some favorable data to the downside, moved ourselves in that direction, and made a 61 pip trading range something a lot more respectable. In fact, the range this week, if I put our crosshairs up here, go from our high to our low, was not...
Well, that was interesting. A lot more respectable. So he's using social references. That was a lot more respectable. It was a big move. It was the guy, the drunken sailor, on top of the coffee table in your small home with your oriental rug that he's spilling his beer on, and you're trying to be polite. You know, that was not very respectable, buddy. So the market's very disrespectful to the trend traders when it's choppy, and it's very respectful to the big bring home the home run moves when it makes a big move, according to this guy's framing of, you know, he's framing the market with social cues of maybe it's not the best mindset to be a trader, the biases and all that.
123, it wasn't 61, it was 164 pips. So we extended the trading range from Wednesday by...
This is very respectable. It's like a car that performs and goes fast.
100 pips for you as a trader, staying in the moment. What you needed to do and what we need to do as traders is to listen to what the price action is saying. Listen to what the tools are telling us. Listen to the bias and the failures and the successes and the leaning against levels. And if we are able to do that, you're going to be a better trader. If you like this video, put the thumbs up. And if you don't like it, put the thumbs down. If you want to post a comment, do that. You can always email.
I guess I'm going to do that. I'm afraid to post it on his thing, lest he think I'm being mean or trolling or whatever they call it. But honestly, is it just me, or did he just not tell us any trades there? So I could break that chart down. In fact, I could go through everything I see on the screen here, and I've actually I chopped off the left side of his screen to try to get mine to fit his, and it's all about me, damn it. So, but I don't know, you know, I've just been doing this for so long, and I'm eternally fascinated by everybody's view. Everybody has a filter, and I'm sure mine is inappropriate all day long, but at least I'm aware that I have a bias to the market going up. So since in forex there is no such thing as a bear market, I can still trade the other side. So if I have dollar Swiss and euro to the dollar, I'd be like, okay, which guy's the best buy? All right, two opposite currencies, which one's the best buy? Now, it still doesn't mean that I feel awkward chasing a trade, or I'm really looking for that spike to get into to lock in my initial profit. So there's certain setups I'm looking for regardless. Now, other setups are unavailable to me because I do not like to be I don't want to be trapped. So if the market moves and I'm like, oh, it's going, and I buy at the market, I always feel like an idiot. So I'm trying not to, for years I've tried not to jump at things, be impulsive. And I think trading at the market, fear of missing out is a reason to pull a trigger at the market. The other fear of missing out is to put too many orders in. So there's no getting away. The way fear of missing out expresses itself in your trading is either going to be you're buying at the market because you don't want to miss out. So I want to get on this. I want to get on the train. And the other one is that you put just too many damn orders in because you don't want to. Not only do you not want to miss it, but you take advantage of what you think is going to happen. So that's very tough. It's very difficult. And it can really mess with your head. Now, he didn't say what goes on here at the end, but and you can't see it here. It did retrace at the end of the day. So there was, even for the bounce traders, there was a bounce here of at least, what is that? I don't know. That's like 40 pips, just about 30 pips. I'm not going to get all that precise about the pippage, but wow, these markets constantly, and of course that's a 1 hour chart he's talking about there, and he's really talking about somebody that does not have a day job. They babysit these markets, they check them every hour, they're placing moving orders. It's quite a bit of work, and I think what he's doing is trying to accommodate the audience. He started off saying people wanted to have a prediction, so people always ask these gold people, well, do you think gold's going to be in so much time? Well, if 80% of the market's consolidation, then it's probably going to just tread water, and then it's going to make a burst up and down. So very hard to predict that stuff. And why bother when all the money's made in the shuffling the deck? The dealing of the hand and the royal flush, which would be the giant move, is not where the money's made. I would say, the people that make playing cards, I mean, they're so expensive now to buy a set of cards. I don't know, it's like $3 or $4 for. I mean, how long have these cards been around? Haven't we paid the royalties on the king and queen yet? So, that stuff. Oh boy. But, yeah, just really trying to get all of these things out of my head, these shoulds and stuff. And I'm sure you've run into this situation where somebody has a tool or a moving average, and you're like, damn, if that thing doesn't work. And some people are like the 20 EMA. Oh, yeah, no, and I would say you could have a 5 period. To me, a 1 period crosses the 3 period, I buy. It goes the other way, I sell. Now that is literally riding the market up and down. Now the problem is you get whipsawed on any strategy will whipsaw you. Any trend strategy is going to whipsaw you, and any range strategy, it's going to break and run, and it's never going to range. When it goes into trend mode, you have to abandon your range trading strategy. Now this is instead of having a bias for direction, it's better to have a bias for behavior. So say I feel trendy, I feel rangy. Now market, regardless of it's going up or down, because the market will have runs, it will have a 3 hour run. You're like, damn, if that thing didn't. But the sideways action, brace yourself, something's going to happen, and there's going to be typically a kick out and a run. And when the market's running, you got to drop down to a smaller time frame if you want to jump on that train to kind of tighten up your risk. And the daily charts and weekly charts, you can pretty much look at about, I don't know how many currencies there are out there, how many instruments, maybe there's 40, if you put gold, silver, crude, copper, just keep going. And that stuff you can look at with a cigar and a martini, and just, the market could be closed on the weekend, and you're going to plan that stuff up. But that's like buying a house. Okay, let's look for a neighborhood without crack homes. Okay, next thing on the checklist, we're going to want a yard. We're going to want, we got a dog. So, not that that's not a good trade. And you buy that house in the right area, the right time, you double your money, or maybe you just need a place to live. Maybe it just feels good to be in a trade. So that's like a position trade. I just feel good about being in this damn currency. And it's, in the end, it's about security and feelings. And so maybe you're not making more than 20% a year trading, and you feel great about that. So that's definitely a problem. I want to try to build a race car. So the fact that I have a grocery gutter, not that you couldn't live, you really could live with just a car that only goes the speed limit, and you're like, okay, you know what? It's totally practical, and there's nothing wrong with that. So I guess I'm kind of course, he has not described any trading here, but I guess people would say, oh, well, you're criticizing people that are just driving like grocery gutters, and you want to have a high-speed car that's illegal, and so why are you picking on this poor guy that's just trying to get to work? Well, I'm not, but if he's going to brag about his grocery getter, I am going to pick on him. Or if he's going to try to sell it to me, I'm going to go like, dude, this thing is running right at its maximum limit. If it went any faster, it'd blow up. So it's definitely minimal. It's a minimalist from not the good side of minimalist. It's a just scraping by. There's no headroom. If anything goes wrong, there's no backup plan, and but they're just the people that are selling stuff, and some people aren't selling stuff. But I always get cringe when people say, like me on Facebook, subscribe, like you're begging. I mean, I don't know. Maybe that's the new industry, right? Not manufacturing anymore, so people are just selling ideas, or they're just trading ideas. I mean, everything I'm seeing is mostly free, and I'm not. I'm learning, and everybody's swapping ideas. Of course, not everybody's acting on everything that they swap, and that's probably a good thing, right? If you're studying bomb building and stuff like that. And you got to be careful what you say here on the even these videos I post. The robots pick up phrases, and I'm going to see if I name a popular artist. Maybe I'm going chemtrail, but I see suggestions. Oh, you probably want to watch this now. Like I could just come up with a name on this video and just say Frank Sinatra. And I guarantee you it's going to come up in my YouTube suggestions to watch. That's where the robots are at now. I just saw they tore down the most gorgeous performance of Peter Gabriel doing Come Talk to Me with Paula Cole, and it's gone from the internet, not available in your country. So I guess I wish it would hopefully I saved that to hard drive. And everything's changing now, so the party's over as far as I hate to go down a political road, but down a societal road, but I remember when CB radio started, and then everybody got one, and it became a big mess because people that were using it on a professional basis, it was designed to be like the 911 call. It was supposed to be the emergency unit, and people get on the emergency frequency and just goof around. And so I guess the internet has come to that point where people are goofing around too much, and here comes the internet police, right, to kind of like if you type in, there was a cake that was made at a Whole Foods in the United States, and supposedly this preacher went to pick it up, and it said it was supposed to be this preacher was marrying another dude. I guess that's how liberal the churches are. So he's marrying this other guy, and when he gets this cake, he takes it home, and it says the word fag on it, F-A-G, which is supposed to be, I guess, a derogatory comment against a homosexual. So, and he's homosexual. He's going to marry this guy. So he's like, oh my God, look what they did to my cake. Well, he did that himself, right? He faked it. So I wanted to see how the lawsuit was going. So I type into the search engine of YouTube, hey, fag cake. Guess what? Nothing comes up. And they autocorrect my spelling to gay from fag. And I'm like, that is so not even... The only thing it shares is an A in the middle. So, and fag, whatever, nigger, nigger, nigger. What it does? They're just words, right? The energy you put behind it, come on. So, the same thing in trading. The energy attached to bullish, bearish. Oh, Greece is burning down. Oh, this is that. I mean, if you're holding this into your psyche and making decisions on this stuff, man, you're in a heap of trouble. I mean, same thing in your life. I mean, you've got to have your own set of moral code. You can't be asking your neighbor, what should I do here? Like, if you're asking your neighbor, what should I do? Man, you got to have your own guidance system. And he said here in the video that people are leaning on that price. They're leaning on that thing. Yeah, people are leaning on stuff, and it gives way. And you're leaning on, I don't know, nobody, everybody's living their own path. And some of the stuff out there, the idealism, the ideal thing, stuff you learned in school. This is how it should be. But that's not how it is. Look around you. Is anybody perfect? Is any situation perfect? Hell no. It's a big mess, and you're always accommodating the mess. If you have kids, they're going to do something that you don't think they should do. Right there at the first conflict, first inflammation point. It's what you do with what happens, not what happens. So in these markets, I don't see much of a difference here. Like, you can place orders out there, and this is like, you just can't take it personally that your orders are smashed or they're not filled or it's just nothing but a really boring job. It doesn't have to be boring. But if you're looking for fun, just open a demo account and just do crazy stuff. But if you're looking to make money, you do have to be objective and analytical at the market. But I don't think you can take all this moral code that we all grew up on, like do unto others and all this stuff, or the whole revenge thing and the jealousy and all this stuff, and oh my God, the panic because I'm missing an opportunity. And somebody presented me with an opportunity the other day, and I just was like, did you really look at this thing? I mean, this is ridiculous, You gotta be kidding me. It's like, I guess I could sell ice to Eskimos, but why bother, right? Anyways, I don't know if that helps. It's just that my point being is that everything we've ever learned about how you should behave is not necessarily a skill for the chaos that prices can present in a very short period of time in both directions. And it's hard to navigate in a world where you're trying to make sense of stuff. Once you give up trying to make sense of the market, which it seems to be the goal for people, let's make sense of this, let's predict, let's try to take the fundamentals and the technicals and combine it into a package that, I mean, it sounds great, and it sounds like you say, God, that sounds totally rational. I don't think it's ever going to work as far as maximizing the dollar return on trading, return on executions. And so unfortunately you have to treat it kind of like a Nazi death camp. How many bodies can these people that, the people still hate those poor Jews. And so, how many bodies can we incinerate per hour? Now, that's really where you're looking at this market as, and you are incinerating people. I mean, if you're buying somebody's stop off of them, you are basically taking advantage of this guy here who is playing golf. And I don't know if maybe he's just trading the way I'm trading. He didn't describe one trade in here for some reason. But It's just, you really are trading against the textbook traders, the people who went to school, the people with the pencil behind their ear. You're making money off of them, and you're doing it in a way that is, you're going against the crowd. You're a contrarian. The most amount of money. I saw a competition between a guy who was trading with level 2 data. They're both trading like ES minis. They're trading stock futures. And the one guy was looking at level 2 data. The other guy was contrarian trading against so he's on the 1 hour chart, but he's actually taking the 15-minute swings. No, he's inside of that wave. He's aware of it. And he's killing the other guy. Because the other guy's looking at, there's all these orders down here, and in a fundamental view of, there's a bunch of traders here doing this, therefore, in other words, he's leaning on other traders' positions for his decision. He's leaning on the crowd's opinion where other people have orders. Is it to say those people, is he trading against those people? Does he think they're idiots, so he's gonna get in the opposite direction with their orders? Or is he saying, there's a bunch of orders there to fuel my move, where the other guy was trading strictly like, you know what, that move's over, we're going the other way. So I think the mafioso approach, the mafia, the illegal trading, illegaltrading.com, that is the winning strategy, I think. At least it is for me. Every time I've done something that I'm not supposed to do trading, and I don't mean about keep moving your stop, but even that, eventually you figure out, okay, you cannot turn a scalp into a position trade unless you got a lot of money. So, but the idea that you wait for confirmation before you get married, make sure that she doesn't have a bunch of debt and stuff like that. In this market, you don't care if Greece is going to hell in a handbasket and you just bought the euro. It totally has nothing to do with whether you make money in that trade, because if you just bought that on a 13-second spike or a 13-minute or a 13-hour sell-off, and you're anticipating that moved too quickly to be a sustainable move, and you're only going to scalp the bounce, or you're going to swing trade it, or you're trading a quiet market that breaks and collapses in either direction, that's all that matters, is the way it's behaving. So when these people say price action, I think what they really should be saying is price behavior. Of course, I totally don't agree with anything out there, I guess. Not everything, but I really find a big problem with the conventional wisdom and the moving average, mushy moving average thing. And he also in this video didn't say anything about the fact that this blue line, and then I'll let you go, you can be on your way, you go back to your normal lifestyle. But when we crossed over here, technically it went bearish, right? So you should have been trading it from the short side. Now this is a whole nother rule system. This is the rule system I grew up on. When cross over here, but we are now in a sell mode. See that? And when the fast crosses the slow, and in MECD, this would have happened. And MECD would have showed you the histogram where this is starting to get closer and closer and closer. So wouldn't this be the sell? The rally after we go into the downtrend? He didn't say anything about that. And how about this thing? Now that it is here, you're taking every sell in that direction. Here, you're taking, as long as the fast is above the slow, you're taking this buy here. You would have made money into that wick. Here, you become bearish. If you take this sell, you better get the hell out, because that thing ripped your head off. So just because, and this is like that, that's a death cross. It's all ridiculous unless you got a trade plan, unless you're going to, there's so much money to be made range trading that. How would this have anything to do with that? Anyways, that's all I can think of for the moment. But no offense to this guy. And if it wasn't for people commenting on other people's videos, I guess if it wasn't for porn, there'd be no internet kind of argument.